Hey, Crypto Family. Welcome to Moon Mission. I'm your host, Ian Bellina. And in today's episode, I'm going to go walk through my new portfolio. I have done a huge revamp to my portfolio. I've gone through and I have sold a lot of tokens. But I want to walk you through the strategy and the reasoning behind that. Because as you know, I am a value investor. But at the same time, I am also a realist. You have to be in touch with reality to make money in reality. So anyway, what's my current portfolio? So let me pull up one of my favorite dApps, Zapper. I love Zapper because I can hook this up to any Ethereum wallet address, even other blockchains from Phantom to Polygon to Binance Smart Chain and even Avalanche. Yes, Avalanche, right? If you go down here, they have all these different chains. Optimism, Harmony, Celo, BSC, Arbitrum as well. Okay, so what's the main change I've done? The main change I've done, because now it's been about 6 months with lots of tokens in my portfolio, but I had way too many tokens in my portfolio. I had easily over 20 tokens, I think about 25 tokens. And right now we've been experiencing a great bull market, but I want to be confident in what I'm holding. And I felt like I was spreading myself way too thin. So I went through and did an audit on my current portfolio on the actual returns of the assets in there and whether or not they're great long-term investments. And I have to be honest with myself. There are some assets I was holding where I don't believe they could last in a bear market, meaning that if we go through this bull market, let's say the bull market ends in 6 months, 12 months, 18 months, 2 years, who knows? But once that happens, 95% of crypto assets will drop more than 90%. Doesn't matter who you are. Even Ethereum in last market cycle dropped 90%. Bitcoin dropped 85%. And altcoins, almost all of them will go close to zero. Right? So the question is, if you look at your portfolio right now and you ask yourself this, what assets, if they go to close to zero, do you think will bounce back? And typically there'll be signs. And even though we're going through and doing great research with projects that have a fundamental score over 80, that have a code review over 80, but we also have to factor in the next market cycle and the current valuation. Is it overvalued or undervalued? Or have there been fundamental changes to the project that change everything? Right? So I'll walk through the assets I have sold. I sold all my staking rewards, and I've sold everything of these tokens except those that have tokens vesting or locked, right? So walking through here, this should have a good portion of my wallets. Yeah, so first up, I have sold all my Siren, right? I was taking Siren. I was pretty bullish on it. It was undervalued, but guess what? In this market cycle, it has not performed. And I think the whole use case for derivatives, options, right now, nobody cares about that. Right now, people are looking into NFTs, DAOs, metaverse, and nobody's looking at derivatives. And with the launch of DYDX, Siren, the fact that it cannot perform in this market, and then the other element, its TM grade was very, very low. Anything with a TM grade less than 70, I have sold out of my portfolio. Right now, I've shifted from being purely long-term fundamental investor to trying to maximize this bull market while we have it. And honestly, the biggest catalyst is my new token I've invested in, Olympus DAO. We covered this as well. Great fundamentals, great technology, but honestly, it's also overvalued. However, it's designed to be a reserve currency, and the price has been pretty stable or has done pretty well, even when there have been corrections in the market. But the high APY, the high yield, this is a game changer. For those who watched my video on YouTube in the last live stream, the 2-hour AMA, I mentioned that this could be a glitch in the matrix. And in a bull run, when you find a glitch in the matrix, you don't hesitate, right? I would say, yes, you go in strong, but you're cautious, right? And the fact we've done our research and we know it's great technology, great code, great fundamentals, it makes sense for me to look at everything. Because now I'm not just looking at, should I hold Armor Finance? Do I have to hold Siren, 1inch, Vesper, all these other tokens that are underperforming the market? Why hold them when, one, I can have the money in Ethereum, which is going to do pretty well, or when I can stake that on Olympus DAO and earn, let me pull this up here. Right, so right now the APY is 7,000%. Yes, this is real, 7,000%. Right? So basically, if you put $1,000 into Olympus DAO, by the end of the year, you will have $79,000, almost 80 grand, almost an 80x return. Right? So when you have this glitch in the matrix, and I go through my portfolio during this audit, and I see Armor and any other token that's not doing well, no hesitation, selling all of them to Ethereum, putting this into Olympus DAO, right? Because I would rather take this APY in a project that's pretty stable, that's designed to be stable as a reserve currency, than take the risk of investing into an altcoin that's not giving me my returns. High risk, high reward, right? When you have the high risk with low rewards over a period of time of about 6 months, and you have options like this, which are low risk, high reward, I mean, time to get out. I mean, so I think Olympus DAO is definitely a game changer. This is why this has been the catalyst for what people are now calling DeFi 2.0. And then also this other fork, right? For those of you who maybe have smaller amounts and don't want to deal with Ethereum gas fees, we also covered this as well. Wonderland. This is essentially a fork of Olympus DAO on the Avalanche blockchain. And I have been trying to buy this. I'm having some issues with my Ledger and MetaMask and Avalanche, but I have bought a small portion of Time and a small portion of Avalanche. So Avalanche now is my third layer 1 protocol now. This and Helium and Ether, right? But if you go to Wonderland, they have even higher APYs. They have 88,988%, right? So basically, almost 890x return, right? This sounds like it's insane, right? $1,000 will turn to $889,000 in 1 year. Now, obviously, the way this works, it seems pretty crazy, but it does make sense. I mean, when you go through the actual documentation, we had a deep dive done by Mehdi a while back on Olympus DAO, but at a high level to walk you through how these, this DeFi 2.0 works, you have basically AMMs, automated market makers, DEXs, where traders, investors, basically users, can provide liquidity to a project, right? So let's say a project in DeFi 1.0, like Armor Finance, people would go out there, like myself, add liquidity on a DEX, Uniswap, 1inch Exchange, SushiSwap, in exchange for adding liquidity, adding 2 trading pairs, Ethereum and that token, in my case, Armor Finance, they would give us a reward, which is essentially an APY, right? For adding liquidity, they would pay us in yield. And that yield with Armor Finance initially was like 200%, then went down to 100% of whatever value we put in. However, the issue with DeFi 1.0 is once that yield stops, once the project runs out of their liquidity mining / incentive program, people remove the liquidity. A rug pull happens. The price crashes, right? So essentially protocols have been renting liquidity, not really owning it. Now, these projects, innovated by Olympus DAO, they flipped this entire model upside down. They essentially allowed the project to own its liquidity. And they do this by issuing bonds, right? So similar to finance, they say basically, we're willing to sell. So in this case, let me do Olympus DAO first, right? You come here, if you want to bond, right? You basically can buy these tokens at a discount, right? When you come here, you can bond. So in this case, let's say you wanted to bond the discounts. So we have, if you add liquidity, if you add wrap Ethereum and the Olympus token, OHM, on the LP token for DEX, in this case, I think it's Uniswap, right? If you take that and then you add it here, you can now essentially sell your LP tokens to the protocol, in this case to Olympus DAO. They're buying it from you at a discount, right? So you basically, my understanding is, don't call me, because I'm still brand new to this, but my understanding is you're basically selling these tokens, or could be any token, to the protocol, and they own it. They're buying the liquidity at a discount. right? And in exchange for that, right, they will vest. This is for bonding, right? Your tokens will vest for 5 days, and they'll give you a reward, right? So in this case, the ROI is 1.88%, right? So what does that mean, right? So my understanding is you're essentially getting yield for giving them tokens at a discount, right? So if you go through the economics of this, I mean, this essentially is how bonds work. Corporate bonds, government bonds, right? With a government or corporate bonds, you essentially are giving the government or a company your money in exchange for yield, right? So in this case, we're giving them tokens in exchange for yield for their token, right? So they basically, when you give them money, they mint tokens, and that's the yield, right? So coming back here, so in this example, I've put, when I invested initially, it was about, I think, 32. This is the index. So, and right now the index value has gone up to 34.8, meaning that you divide the current index by the amount of when you initially deposited your capital, right? But I won't go too deep into this, but looking at this, right, this is the current ROI over 5 days. So this is a 6.18%. It sounds pretty low, but this is compounding. And this is how you end up getting the high APY, right? So right now, in their treasury, in this DAO, you have $3 billion deposited, right? And they can use this, my understanding is, I believe when the price crashes, to then buy back their own token as well, right? So while this APY seems high, Olympus DAO and even Wonderland have been pretty sustainable thus far, right? And they have $3 billion in their war chest, right? So right now, the way I'm playing this is this. Who knows if this will last forever? Probably not. But right now, there's a glitch in the matrix where it's working, and this project has great fundamentals. So I'm willing to take a risk on this. This is a calculated risk. Same thing with Wonderland. Wonderland scored pretty well. I think it scored an 82 on the fundamentals and a 78 on the code review, so an average over 80. So I think these two are good. We looked into ClimerDAO, which is doing the same thing, but with carbon credits. That scored a 76, I believe, on the code review. That one is on Polygon, Matic Network. That one, I'm not putting anything into it. I'd rather put money into Olympus and Wonderland. But I mean, this is a glitch in the matrix, right? So my plan is, this is purely a short-term play, right? So what time frame is that? Until it stops working, right? So my plan is to stake. I've basically sold all my shitcoins that are not doing well, where my money could work better on Olympus. Right now, earning almost 80x return in 1 year. And I sold everything to ETH for the most part, put it into Olympus. I have some on the Avalanche blockchain. I'm trying to transfer through their bridge, but having some issues with the MetaMask and Ledger. But the plan is, I'm putting about 5 to 10% of my portfolio into Olympus and into Wonderland. That's basically my game plan, and just earning this passive yield. And immediately my goal is to recoup my initial investment and sell, right? To sell my yield earned from staking. So the plan is within 1 to 3 months, once I have my initial, sell, and the rest is house money. And that way, if this possible Ponzi-nomics stops working, I'm good, right? The first thing to do is to protect your investment. Once you've taken out your initial, then there's this house money, then you can be even more aggressive, right? But for me, I had to really assess everything I'm holding. So let me go through and share what tokens I'm out, because I know some of you will be curious, right? So I've sold all my Sarin and the ones I've earned from staking, sold all my Arma Finance. Arma had some news with the founders. I think they launched some other token, and looks like the dev team has been going through some issues publicly, right? To a point where, I mean, I'm not sure if it's even the same team working on the project. So essentially, it looks to be abandoned. And right now, I don't want to risk holding that. while projects like Olympus DAO are making money. Sushi, sold on my Sushi, sold on my PNT, P Network, sold on my Vesper, sold on my 1inch. 1inch has not done diddly squat in this market, so sold all that. Sold on my Opium, sold on my Tornado Cash. I even sold on my Perp. Yes, my Perp. Now Perp made money. Perp made me pretty good money. I think it was about like 3 to 5x. But Perp has been good. I still have some Perp that's still being staked, that's vested, because they have this cool off period. So all my Perp that's unstaked, I have sold. Idle Finance, I have sold. And yeah, that's basically that for the most part. Let me see if there's anything else I've missed. Even Benchmark Protocol, Mark, I've sold. Yeah, so I've sold all that. Let me switch to my other wallet. Okay, this one doesn't have too much activity. Yeah, these yeah, for the most part, I've sold almost everything. Now let me actually pull up my Blockfolio because that has other stuff in there. Okay, so what am I currently holding? All right, so right now my largest crypto asset is actually Helium. Helium is, let me break it down by percentages because Helium is not on this. So right now Helium is almost 40% of my portfolio. So I mean, I am heavy on Helium, still very bullish. With 5G coming, I have my 5G device. Now, I ordered the Nano Cell, but mine did not come with it. I'm not sure what the heck is going on. I did reach out to support to see what's going on. I'm not sure if there's a delay on that, but I do have to set this up. But my 5G is here, but I don't think it makes sense using this without the Nano Cell. I have to double check. But yeah, Helium is 40% of my portfolio. Ethereum is 20% of my portfolio. I have Matic, which is on the Polygon chain. That's about 12% of my portfolio. And Olympus is about almost 10% of my portfolio. I have LDO. LDO I still have because I'm bullish on Ethereum and ETH staking, liquid staking. So I do have Lido DAO, LDO. I still have Audius. I'm not sold my Audius. That's still being staked. I still have Liquidity. Liquidity is one of the few projects that's underperforming that I still have. I have my Adventure Gold, the Loot token. I have some staked Ethereum. All those are under 5%. And I still have Alchemix. So basically, going through my portfolio audit, these are the projects that I think I'm willing to hold through a bear market, right? So Alchemix, Liquidity, Perp, that I plan to just sell all of it because Perp and Siren, I'm not really fond of derivatives right now in this climate. I think other narratives have taken over. Lido DAO, I'm bullish on that. That's basically me doubling down on Ethereum. Matic, I still have some, but I mean, I may sell some. I mean, right now the plan is every week or month, I'll be selling all the yield I earn from Olympus DAO and using that to fund other stuff, right? But in essence, that is my new portfolio at a high level, right? And my reasoning, as mentioned, I'll walk you guys through all that. Right now, there's a possible glitch in the matrix where a project, because there have been so many forks out there, but I typically like to go with the first innovator, the first of a category, in this case, Olympus. Now, I'm not buying Olympus for the actual token, although the token has done pretty well. If we actually pull this up here on Token Metrics, right? So even though this TM grade is not too well, right? I mean, if you got in here, right? Olympus, the price of Olympus was 270, and it went to 12,000. Now, actually, I think we should be looking at the market cap because it is a rebase token. We don't have that here. But in general, I think Olympus has been pretty stable compared to other altcoins that have been crashing, even in a bull market. Because for a low cap altcoin to underperform in a bull market, I mean, that's not good at all. I mean, I'm not asking for 100x, but at least do like a 1 or 2x as a low cap coin. I mean, basically, if the altcoin is not paying you for the risk you're taking, if it's underperforming Ethereum, I mean, that makes you have to reassess whether it makes sense holding that. And unfortunately, sometimes we're wrong. I mean, that's investing. But we can manage the risk. So if you make 10 investments and more than half of them don't pan out, you only need 1 or 2 big wins to do well, right? You only need 1 Helium, 1 Matic, or 2 to do well, right? But now we're looking for the next one. Or we're looking for ways to earn yield, and to earn high yield and something pretty stable, at least compared to other altcoins, that has $3 billion backing it with the high APY. I mean, I think this is a glitch in the matrix that we just take. It's similar to how DeFi, when DeFi launched and Yearn Finance happened, and people got in early and made a killing, or kind of like getting into Shiba Inu, right? Those meme coins, or getting into NFTs early. I mean, I think we may be seeing a new narrative, DeFi 2.0, right? And if we can get this APY, or even better, this APY, with projects that we have vetted that are pretty good and pretty decent, I think it makes sense, right? Now, I'm not saying go out there and hodl the token long term, right? This is not a long-term investment thesis at all. This is a short-term, almost trading strategy, right? This is basically a swing trading strategy to maximize a window of opportunity in this market, right? So in essence, go out there, take a look at these 2 projects. Be careful. Don't go out there and ape in, always manage risk. For me, I think a good position is 5 to 10% of your portfolio with capital you're willing to lose, right? Because it is crypto, stuff does happen. They could get hacked, but that's besides the point. If you manage risk correctly, you can always bounce back, right? So in essence, that's the way I view it. Now let me go to Zappify over here, right? So I want to speak about Avalanche. I mean, you know, for the most part, I've been an Ethereum maxi, that and Helium. But this is the first blockchain that I'm now really beginning to accumulate, right? For those who don't know, Avalanche essentially is like Polkadot, right? Except just with a lower market cap, right? It's meant to be an internet of blockchains, right? You can connect other blockchains into Avalanche. But the reason I like them, besides really enjoying their white paper when I read it a while back, was probably the best written white paper I've read ever. But seeing their growth, their ecosystem, they have a huge war chest, right? They announced an ecosystem fund for over $300 million. So I think this, for those of us looking for the next Solana, looking at all the projects out there, I mean, I think Avalanche is one where I like it, right? We're looking into Trader Joe. Trader Joe has it's basically like SushiSwap for Avalanche. It's a DEX with yield farming, lending, staking, all that. This scored over 80 as well, although I think it might be somewhat overvalued. I don't plan to buy this, but I like the ecosystem they're now developing. And I don't think that's going to go away anytime soon in a bear market. And I think the CEO is very public. He's very smart. So I'm not saying go out there and ape in, but I'm beginning to accumulate AVAX, right? Because layer ones have been on fire in the last month or two. Solana, Avalanche, Algorand. I mean, people have been looking for the next big layer one. Polkadot, even Cardano, right? And if I look at the Internet of Blockchains, we have Polkadot, we have Cosmos, we even have Polygon for Ethereum, we have Avalanche, right? And looking at all of them, I mean, they're all solid projects, but I'm trying to see which one I think could do well. And I love how all these projects that are being built on Ethereum are being forked very quickly onto Avalanche, right? So, because we have Trader Joe, which is very, very good, scored over 80 in code review, and even Wonderland. Code review was 78, so close to 80, but fundamentals were pretty good, right? So I'm seeing lots of developers, even though it's small relative to Ethereum, lots of developers begin to just fork projects and put them on Avalanche. It seems like Avalanche is now the de facto Ethereum competitor of choice, right? Because early in the year, developers would fork projects and put them onto Binance Smart Chain because it also supports EVM, Ethereum Virtual Machine. So people can verbatim copy and paste from Ethereum onto Binance Smart Chain. But then Binance Smart Chain was centralized. So now people have been looking for replacements. And I think if I had to look out far in the next 6 to 12 months, what chains that are EVM compatible do I think could try to steal the whole Ethereum has of high gas fees? I've always said I've never been a fan of BSC, Binance Smart Chain, because it was centralized. So out of the other EVM layer ones, I think Avalanche has a huge use case because one, it's meant to be the internet of blockchains, right? And then two, Near protocol is also one. I think especially with the launch of Aurora, which lets people copy and paste. So I think Aurora will help Near do well down the road. Both of those projects scored over 80. I think Near might have been at 89 on code review. So I would definitely leverage the TM grade for entries, but who knows how long this market will last. But the way I'm viewing it is anything under 70 that's not doing well in my portfolio, I'm selling and putting that into Olympus DAO, Wonderland, and projects like this that score well with fundamentals and technology that are paying out high yields. It's kind of like yield farming in the first month when yield farming was just food tokens and meme coins, and people thought it wasn't real until people made a killing with it. Right? So anyway, that's the way I view the market. Let me know what you think. What coins are you selling in your portfolio? Let me know in the comments or on Twitter at Diary of a Made Man. With that being said, this concludes Moon Mission. And as we like to say, the moon is not the limit to the moon and beyond. Thank you.